This is a video chart presentation of EastBridge Investment Group brought to you by Accelerise Financial. EastBridge is a NASDAQ bulletin board company trading under ticker EBIG. Stock price just made a great climb. Technically speaking, this was very solid. Moving averages pulling together. When you see that happening, you look for a bigger move to come. Rounded itself off, blew through a resistance at 7 cents with increased volume, continued the climb. We'll come back and touch on this with some Fibonacci's. This is a really nice retracement. Taken off and made another move again. Closed down a little bit on Friday. See down 5.88% on 100,000 shares traded. Pulling back inside the Bollinger Bands at this point. We'll take a look at these lower indicators and we're going to see it might be time for a little bit of a retrace. We see a strong uptrend overall in the MACD. Look at the nice divergence with the MACD back towards the money line. Price per share was trending down. Upon the break of the money line, there took off the price per share. Technically speaking, very sound. PPO also with a strong trend upward, both starting to give a hint of a possible pullback. Separation was pretty large, but technical traders will be looking at this for possible entry points. You always look for the upward movement to continue, but you plan for a pullback as well. One thing I like about this, ADX still channeling upward right now, coming off the underneath side of the channel. Hasn't even pushed its way into a real strong trend through 30. There's still plenty of time for this to retrace a little bit, and then try and put together a continuation move. What we look for in things like the MFI is ideally hold this key level of 50. Still very strong, very nice uptrend to them at this point. Reiterated by the accumulation distribution, which is showing that buying pressure is very strong. Again, nice upward channel, a lot of buying coming into this stock. Chaikin money flow holding well in the green, showing buying pressure is overcoming selling pressure. Nice divergence to the Chaikin money flow back through zero. Strong uptrend, showing you buying and selling was equalizing, and then the takeoff in price per share happened. Always something to look for. Then you look for it to reach high levels, come back down, reset itself, and then try and take off again. You can see back through here during the retrace, buying pressure was still dominant, and then the price per share took off once more. The buy point per Lambert's definition is the break through 100, and it's a hold until it breaks back down through 100. You look for it to hold over top of zero to maintain a completely bullish look. Full still, one thing that's very common, strong uptrend, push its way through 80, showing it's extremely bullish. It can trend over top of 80 for a long time. It's considered overbought, but it's not really a concern because it can trend up at that level for long periods of time. One thing that's very common to see with this is it come back down, break through 80, curl, and turn right back up. It's extremely bullish. It can be a very strong move when that happens. So we'll look for that to come down, reset itself, and then take off again. Tricks, bullish cross right through there. Again, bullish in the long term. A couple other things, just a quick note, as I touched on before. When you look for charts to try and explode, you'll see things just like that. Strong uptrend in the full still. It went along with the Chaikin money flow, as I mentioned. CCI, strong uptrend. See all those things starting to happen, you need to look for that price per share to try and explode. And the Tricks followed right along with that as well. You can see making higher lows, trending back towards zero. Tricks is a great long-term indicator. It's exponentially smooth. Holding over top of zero with this bullish cross is a nice look for the longer term. RSIs. Got a little toppy again, but momentum traders look for that area. They call it the power zone. So what you look for in the RSIs, again, is on the retrace, preferably holding over top of 50. That's considered bull chart territory. One thing that's very interesting to note about this chart is when you put some Fibonacci lines on here, you'll see how this played perfectly right along with the Fibonacci's. The strong move reached a resistance level at 15 cents. You can see it had a hard time breaking through it. When it couldn't break through, it looks like some sellers got impatient, took their profits that day, but it pulled back and bounced right off this 61.8% line. Established a very brief support there at 0.88, which tied in basically with some price per share support at 9 cents. Combine that with the Fibonacci's, and that's a strong support level. Then the move took off again. Overall, this is establishing itself as an uptrend. When it holds these Fibonacci lines and then takes off again, the uptrend is basically affirmed that this is looking to continue. So if I take these Fibonacci's, I'm going to pull them back over to here because we're going to set up 19 cents as a new resistance level. On a grander scheme of things, these are some price points people will be looking for. You can see that's going to come in somewhere around 137, 12, which has already defined itself as a support level. It was resistance through here, broke through it, held it on the move, and continued the move. That's also going to pretty much correlate with this 50-day moving average. So this area around 12 cents is going to be something to look for if it does happen to pull all the way back to there. You can also take a look at these fibs from just this recent move, and you'll see the correlation here with this 14 cents, which is right there around 13.7, which is what I had noted as the 38.2. There's a quick lesson in Fibonacci's. On an overall level, you can see how it was very effective on the first move. You can see what to look for on this second move, and you can see how the two tie together. When I look at the overall picture of this chart, I see the bullish cross right here called the golden cross of the 50 through the 200-day moving average. It's a very bullish move in the longer term of a chart. A lot of technical traders use this pink line right here, the 10-day moving average, buy and sell points on plays that have made big moves. That, of course, is dynamic. It's also going to tie in with that 14-cent area. And although it's pretty close, this 15-cent marker you can see was the resistance that it broke through. Look for that to become support again. So the EBIG chart has several defined areas of support, and most of them seem to fall right in this area between 14 and 15. So in the shorter term, I'd look for that 14 to 15 cent area to be a very strong support level. One thing it is interesting to note, I don't have the chart up, but if you take a look at a much longer term, say a 3-year chart, you'll see that 19 cents is a multi-year high. And this is actually tying itself into what looks like one really large cup pattern. So if you saw a pullback through here, it has completed a cup and handle continuation pattern. I'd really keep an eye on this because the possible upside to that is quite large if it makes the move and breaks through 19 cents. I typically won't put targets on things because people new to technical analysis a lot of times will jump in and say this is definitively where it's going. I'm not saying that, but a typical cup and handle pattern would be the bottom to the top. That would be the depth of your cup, which in this case would be about 15 cents. You'd look for the breakout point, which is 19 cents, and you'd add that 15 cents to it, so to put your target around 34 cents. That's something in the longer term to look for with the EBIG chart, and I encourage technical traders to take a longer term look at this chart as well and see that pattern forming, because there really is no resistance. If this breaks through 19, it's basically into a blue sky breakout. That's what I have my eye out for. So any sort of retrace doesn't concern me. It's healthy for the charts to reset themselves. You always hope for a continued upward move, but you plan for a retrace to define support levels and entry positions. And I think that EBIG is a chart to keep an eye on because it's definitely developing a strong uptrend, and the lower indicators are certainly all still bullish in the long term. As always, merely my interpretation of the EBIG chart. To learn more about EastBridge Investment Group, please visit the company's website at EBIG.QB or the OTCinvestor.com to begin your due diligence. Thanks for watching and trade smart.